Good evening, ladies and gentlemen, and welcome to the second webinar in a series of SADC Innovation and Investment Challenge webinars brought to you by FinMark Trust. My name is Robert Jones. I am the lead for the Zambian and Mozambican legs of the competition, and today I have the pleasure of moderating today's webinar. Poverty remains one of the greatest challenges facing the SADC region, with approximately half of the population living on less than $1 a day. Innovation is crucial to the region's economic development and a key contributor to enhance economic growth, employment creation, and the alleviation of poverty in the region. In support of this, FinMark Trust launched the SADC Innovation and Investment Challenge to lay the foundations on which to develop enabling innovation ecosystems that support the design and development of products and services that meet the needs of underserved and unserved individuals. This strategy is expected to catalyze the development of scalable digital solutions that, firstly, increase the availability of meaningful employment, and this is in particular for vulnerable groups such as women and youth. Secondly, improve access to usage of basic services. And then finally, to lead to a more inclusive and responsible financial sector. The SADC Innovation Challenge involves participants from 7 African countries within the SADC region, and these include South Africa, Malawi, Zambia, Mozambique, Lesotho, Botswana, and Tanzania. It aims to support early tech-enabled innovations that address 4 key developmental challenges facing the SADC region. And these are SMME finance, which is the topic of today's webinar. Secondly, digital financial identity, women and savings groups, and finally, access to basic services. Today's webinar topic is related to SMME financing, and we have 2 wonderful speakers lined up today. The first being our SMME financing thematic expert, who is Obert Maposa from FinMark Trust. And we're also joined by a guest presenter, Mr. Kampert Felani from Genesis Analytics. We'll close the webinar with a brief Q&A session with our presenters. So if you do have any questions, please will you use the Q&A functionality in Zoom. You should be able to find that on the bottom of your bar, and we'll try and address as many of these questions as we have limited time. So without further delay, I'd like to hand over to Obert to take us away.
Thanks, Robert, for the introduction. Without delay, I'd also like to thank Comfort for his time and joining us today. Just to kick off on what we really looking to do in this we are trying to we're going to try and expand on what we mean by the problem access to finance and how MSMEs fit into the broader equation of that problem. And we're going to have 2 aspects, mainly your demand side, covered by the data we generate through FinScope MSME surveys. For those that do not know MSME surveys, I'm going to run through that quickly. And we're going to go through the supply side findings using Malawi as a recent study that we conducted in 2019, going into 2020, and are finalizing now, just to give you a brief synopsis of what the issues are around access to finance and other factors within the supply side MSME economy that contribute to this problem. So just to run down on what we refer to by MSMEs, which are your micro, small, and medium enterprises across the SADC region. Primarily, these are enterprises or entrepreneurs. They might or might not have employees, depending on the country definition, and we also follow closely the SMME policy that is established by the ministries involved in a particular country. So these will be currently in businesses or trading, and they do not include those enterprises that are shelf companies. In other words, registered businesses that are not yet trading or participating in the formal or informal economy. These MSMEs may or may not be registered with an industry corporation that licenses or registers businesses, or they might not be licensed by any trading municipality or institution within a country. So we look at broadly the universe of all MSMEs within the region, and be they formal or informal. And MSME size, micro, small, and medium, is broadly defined by three main indicators, which is firstly your turnover, which is the amount of revenue generated by the enterprise. Secondly, the number of employees, which are largely regarded as full-time employees only, and do not include your seasonal as well as your part-time employees. And the last one is the value of assets that are registered to the business. So this will not include your household-owned assets, such as your home or your deeds that might be owned in an individual capacity. The second part that I really want to touch on quickly is what is the role of MSMEs in the economy? Broadly speaking, in Africa, as well as looking at the region in more detail, a larger part of our MSMEs are the biggest contributors to employment, as well as revenue generation for many households. So there are two very important contributions that MSMEs provide in the economy, not only to provide basic services that are needed for functioning within households and within the commerce industry itself, but also providing a livelihood source for income generation by those that work in them, as well as the entrepreneurs themselves. So what we do know around the MSME, as well as their contribution to the broader economy, just looking at one study that was concluded recently in Malawi, we were able to scope as well as size what this sector generates to the broader GDP of Malawi, as well as the number of employees it absorbs. Generally speaking, across the different countries within the region, this is seen as a significant sector that, given the adequate support, could be one of the catalysts in providing employment to a high and actually increasing number of youth that are graduating with no employment, as well as to provide the basic services that are still lacking in our developing economies. And we see this as one avenue that, with the right support and innovation, could contribute much more into these very important parameters. So what would we really like to know, and why, is the scope and extent that most of our informal enterprises, which contribute, which are about 90% of all MSMEs across the region, are unsized and unknown. For those countries that have had a few surveys that speak to the contribution or the sizing of these, we are well enough, we would know enough to spell out who these MSMEs are, what their role is, and also what are the limitations around their development in operations, in startup, as well as in growth. But for the broader number of SADC countries that are still to implement a similar survey or a quantifying census on businesses, we really do not know the extent and the diversity of these MSMEs. So what we really trying to do in this whole MSME landscape is really to be able to quantify what the demand side aspects are. And when we say demand side, we're really looking at the center of the universe being the business owner themselves. What are their challenges? What are their needs from a growth, operational, as well as startup perspective? Why do they use financial services? What is the role of financial services within their business? I think within commerce, it is an unavoidable task that one needs to handle finances as well as financing the business needs from a day-to-day and going concern perspective. On the supply side, we look at the various aspects that affect the businesses from both a micro and a macroeconomic level. So your legislation, your compliance, your suppliers in terms of financial services, your suppliers in terms of other business support services become quite important. And what we've aimed in particularly shaping the diagnostics that we do at country level is to combine both the demand and supply to also give a regulatory and policy overview to see what are the impeding factors that could actually stifle innovation as well as growth, formalization within the MSME sector from that perspective. All of these efforts are aimed to realize economic growth as well as have financial inclusivity of businesses realizing that potential into growing the sector and making it more sustainable. We have two main products that I've mentioned. So the data is publicly available and downloadable online. The diagnostics where they have been completed are also available, Malawi being the second country after Eswatini 2017, 2018. So just a bit of a background of what FinScope is. It is a tool that was developed by FinMark Trust to measure how businesses generate their revenue as well as how consumers generate their income. So there are two types of FinScope consumer survey, FinScope surveys, one being the consumer, which deals with the individual or household. This tends to be, has been the longest and has a bigger footprint across Africa, the Caribbean, North Africa, as well as Southeast Asia. We also look at FinScope MSMEs, which is more of the data that we're really interested in right now in unlocking this problem. And that mainly looks at how the businesses conduct, what sectors they're in, it sizes them from individual micro, small to medium enterprises based on the country definitions. We look at turnover, we look at issues that stifle their growth, we look at their access to markets, we look at employees, skill levels, we look at legislation and compliance. So there is quite a sizable amount of data that can inform and underpin the innovation that we're really looking at these particular problems. On the other side, we have the diagnostic, as explained in the previous slide. This really looks at the supply and regulation and policy perspective, and together this is what we call as a map, a MSME map product, which has both a FinScope, which is a demand component, as well as the diagnostic, which looks at the supply, policy, and regulation aspects. Just looking at what we're really talking about when we're looking at the demand side, which is business owner centric, and we really try and understand it from that perspective and generate data. It is, as I've said, FinScope a demand side tool. We generally have been a thought leader in this process of understanding what financial inclusion and measuring it comprehensively, and being the first globally reputable currency in measuring these. The transition that has happened within the FinScope MSME from the first generation to what we're calling the second generation of FinScope MSME surveys has really been tweaked and tested in over 8 different markets, as well as has currently been investing in a lot of how do we size these MSMEs, which are largely informal, with high mortality rates, and how then do we really give more credible data and considering the cost efficiencies that are needed to make this sustainable. So given this background of FinScope data, it then drove the agenda forward into making this a public tool, as well as making sure that FSPs, supply side policymakers, are the core custodians of this data and may use it to generate policy, as well as also to generate products and insights around the sector. And this is the same data that we're looking at in terms of generating a sustainable solution around access to finance in the region. This slide here just gives you on the left what the FinScope consumer footprint has been. As you can see, most of the SADC countries have this consumer survey conducted. Only Angola and the Comoros are still to conduct this, but largely adopted in Southeast Asia, West Africa, as well as East Africa. Looking on the right, we've got 8 countries in SADC that have this MSME FinScope survey data across the various years, the first one being in 2010 in South Africa, the latest one being in 2019 in Malawi. So this again is available and should be sweated to really try and get a demand side grasp on who we're really talking about and develop solutions that are tailored to their needs. In FinScope, we have a financial access strand which gives you a brief overview of what the access to finance levels are within a particular market. Reading from your left to your right, you will see that for most countries, the level of access to bank products and services is quite low. Most of these are actually driven by personal account ownership. So once we start looking at business account ownership or business account usage across MFIs, SACCOs, or business usage of informal products, this would look a lot different and the penetration levels would be much less. But we also know that a lot of the MSME owners have a dual use for their personal funds or accounts, as well as even resources. So most operate their businesses from their home or generate whatever service, using the utilities and the assets that are also owned by the household. So it becomes quite tricky to separate the two. However, looking at these access levels, we see that bank penetration, with the exception of South Africa and Eswatini, is less than 50% of the universe of these MSMEs, as well as looking at the penetration of the informal, which is mostly where these businesses turn to. So your Stockfells, your SACCOs, your ASCAs, your ROSCAs that have a business concern have a significant role to play in sustaining small or micro businesses. As the business tends to grow larger to your medium scale, more and more of these businesses start accessing your formal products and services. So just this slide gives you a snapshot of what the problem starts to look like from a regional perspective. What we've learned from the past surveys, and I've pulled 3 countries just to show what the main pain points within each of the different phases that businesses go through have been. For Lesotho, in the startup phase, popularly was sourcing money. How do people get funds to start up their business and invest into whatever, be it machinery or buying stock, etc. Less and less would your problems have to do with money, but most of them, if we really look at the underlying issue, it is funding. So if we look at equipment and raw material at startup, again, that is an issue that could be answered by funding. Access to credit becomes one of the other options there. looking at your operations and management, sourcing money, as well as your growth, which is your main issue in terms of growing your business. Again, the next two parts, we're looking at sourcing money. And just to unpack the sourcing money, what is being meant by that, from the perspective of the business owner, is how they are able to get access to funds. So this could be in terms of borrowing, it could be in terms of grants, etc. What we've also learned from Eswatini 2017 is the same. The narrative being businesses are finding it quite difficult to obtain capital. And one thing we'd want to stress upon is that access to finance, it does not necessarily mean access to credit. It could be a cash flow problem. It could be a banking problem. It could be a storing it could be accessing markets, financial markets to invest. So we tried as much as possible to unpack what access to finance / sourcing money / access to credit would be. So around all of these, and the problem that we're really trying to stress through today is that an access to finance problem could have cost issues, could have proximity issues as to where they actually can go and access these funds, could have literacy issues on times that on documentation, as well as the cost, the amount being borrowed might be insufficient, as well as they might not be actually getting the correct funding that they need for their businesses to flourish. Right now, I'll give over to our guest, Comfort. Will take us through to give you a brief of supply side view on this problem.
Great, thanks, Obert. I'm just testing that you can hear me. Is my voice coming through clearly?
Yes.
All right, awesome. Hello, everyone. Great to meet you. So we are looking at the supply side diagnostic, which really combines the three components that Obert spoke about earlier. So demand side, supply side. So we specifically looked a lot more on supply side. So the landscaping of financial service providers, what types of products are available, and whatever key challenges are faced on the supply side's perspective. We also looked at the regulatory and policy environment, and also an overarching issue, which is the macroeconomic conditions of the country. And then we tied all these components, including the demand side, to come up with some of the topics that I'm about to discuss in a couple of slides that I'll touch on. So I think it's first is just to recognize that context really matters when it comes to programming and developing solutions in any market that you speak of. So a brief contextual overview of Malawi. Malawi is a small landlocked country with a population of about 18 million. It's characterized by rather low levels of incomes and a largely rural population. There's two sectors that really dominate the economy. So agriculture taking up about 30% of GDP. And then your second sector being trade, restaurants and hotels at about 18%. So agriculture really pulls through there as the key sector that really dominates the country. It is, however, conducted mostly by your smallholder farmers, apart from your estates, and in a highly vulnerable state towards weather shocks. So we've seen the effects of droughts and floods and so on. It is also characterized by rather low levels of productivity and very limited industrialization. And by industrialization here, we talk of mechanization within the primary stage, but also agro-processing and manufacturing, which is now moving down the agricultural value chain. Likewise, on the trade sector, it is still also dominated by your micro and small traders, but we have seen the emergence of large retailers such as Game, ShopRite, and Spar. So it is really within that context here that you see that push for what we call a sectoral focus. So we saw it quite important for government and I guess all stakeholders within the market to really focus their strategies more around what are the key sectors that prevail within the Malawian economy. The second bullet there emphasizes what I mentioned around agro-processing and manufacturing. And we see these as really growth sectors that should be prioritized in an effort to industrialize Malawi. So if you read most government statements or policy statements, there is a talk about diversifying the economy away from primary agriculture. And really the first step here is how do you get the entire value chain right? Moving across towards agro-processing and value addition. We also see great linkages between your wholesale and trade as well as tourism sector as the two second largest industries within the country, and how they link so well to the agricultural sector, either being sourcing agricultural inputs to sell in the markets or sourcing agricultural inputs as part of your value or value addition and services that you provide to your guests in a hotel. So that is really important to see what those linkages are and leverage those linkages to further explore areas for growth within the country. However, we do note that infrastructure remains quite a big challenge, so particularly around energy. So we know issues around lack of access, especially as you go to rural areas, issues around power cuts, issues around how expensive it is to also access credit, energy. And it's similar with your ICT infrastructure, which is mostly concentrated in your urban areas with very little infrastructure seen, especially once you go to more remote areas. So this really creates a picture of where the country is from a macro perspective. And I guess what we're walking away with here is that it's really important to pinpoint which sectors dominate the economy that you're in, and trying to leverage the strengths of those sectors that dominate and trying to focus on growing those rather than adopting more generic sector-focused strategies. But if you can move to the next slide, please. I seem to be having issues with navigating the PowerPoint. So these are some of the characteristics that we saw on the demand side. And I think Obert already mentioned when he was going through the demand side issues, and that sourcing capital really is the leading challenge or constraint that MSMEs in Malawi face. So more than half of businesses don't have access to credit, and less than 10% actually get credit from a bank. This varies, of course, based on size of the enterprise, and with only 3% of these micro enterprises getting any form of credit from a bank. We also talk of how limited access to market stifles the growth of SMEs. And the issue here is a lot of SMEs depend on walk-in customers or word of mouth as a way of growing their customer base, with very limited access to either support programs to get your products out there. It could be, market assistance programs, packaging programs, or whatever, but also very limited use of digital technology or platforms such as, Facebook or Instagram or anything like that, which could promote, e-commerce or at least marketing at the very basic. So we also see issues of capacity within the MSME cohort. So low levels of business and financial management skills, which affect not only their operations, but also impacts their ability to access finance. So if you go to a bank, they traditionally want to see that you have up to however many months of financial statements that are ready. And what you see in most instances is that especially your micro and small enterprises don't generally keep any books or don't keep any up-to-date records. So this tends to shut them out from accessing any form of formal credit when it comes to a country like Malawi as well. Formalization as well as compliance to the laws of the country are also constraints, and these are due to either lack of awareness of the process that one can take to formalize or meet whatever compliance requirements are necessary, but also just knowledge, where, if I wanted to formalize, where can I go? What is, if there is a benefit to formalize, what benefits can I get? Is there value for me to formalize? So this awareness and knowledge really is an issue. The last bullet there is that women and youth face a number of challenges in growing their businesses. So we see very limited, very little representation of women and youth, especially in your small and medium enterprises, and they tend to be a larger proportion of your micro enterprises. So that speaks to some challenges that exist when it comes to women or youth-owned enterprises graduating from micro to small enterprises. Obert, you can move to the next slide. On the supply side, a key issue that we've seen is that there's really been a lack of a diverse range of providers that have been able to meet specific sector and life cycle needs. So life cycle being from startup, are you growing, are you maturing? And the key problem or the key issue that we note here is that there's a very limited range of providers. So your banks and MFIs are, the leading providers of finance, and however limited it is. And you see very little alternative sources of financing that exist. So a very nascent impact investing environment, no private equity or venture capitalist type funds that are available in the market, no listing on the Malawi Stock Exchange or the alternative Malawi Stock Exchange for small businesses, and also lack of fintech solutions in your credit, savings, and insurance provision. I think where we have seen some innovation in financial services has been the growth of mobile money, as you've seen in your markets such as East Africa. So that's been one area where we're seeing increasing growth of usage of financial services amongst MSMEs. But on the other issues such as sourcing finance, which is the biggest barrier that SMEs face, there's been very little movement there. We also talk of information asymmetry between lenders and borrowers, which drives high perceptions of risks. So this either leads to rejections of loan applications or very high interest rates based on whatever risk premium that banks place on an applicant. And there are some tools that could help with this process. So there are credit reference bureaus that may be applied to reduce or at least provide information to financial services providers to enable them to better risk measure whichever customers are looking to apply for their loans. And there's also other mechanisms such as your warehouse receipts that can be used as a form of collateral, but also the use of platforms such as collateral registries where financial services providers can see that a customer, even though they don't have any land to pledge, but there is movable collateral that is available and has not been pledged to any other financial service providers, that can be used as a way to de-risk the loan. We also see lack of innovation, as I mentioned in the previous bullet, in how financial services providers actually conduct their credit assessment method. So beyond having the data that's available, you need the capability to use it to be able to build the right credit scoring models and be able to price the loan product properly. I spoke of how mobile money has kind of led to an increase in the use of digital payments, but the lack of payment interoperability, which limits the flow of funds within the national payment systems, as well as limited partnerships within your formal providers and your informal providers, is something that's still going to create a mismatch between the needs of your borrowers as well as what your providers are able to provide. So we think partnerships as well as interoperability are really steps that needs to be taken in the country to be able to promote greater innovation and greater access. Obert, you can move to the next slide. So looking at policy and regulatory issues, I think one thing that was interesting for us to see is that the government has been quite proactive in introducing a number of supporting policies and regulations. So for example, the MSME policy, which is a really comprehensive policy aimed at growing enterprises and addressing challenges that they face. However, the implementation of the policy has lagged behind, and we think that implementation could be improved by making the policy a bit more flexible as far as focusing specific areas or specific sectors that needs to or that are seen as strategic areas of focus versus promising an entire implementation of a policy at the get-go. On issues of government procurement, which I think all around has been seen as one way to promote MSME participation in the economy, the government did introduce a 60% procurement from SMEs policy, but this has has also not been implemented in the country, and it's one area that needs to be fully implemented and also, you know, expanded on to focus on youth and women, given the challenges that I spoke of as far as them being able to graduate from micro to small and medium enterprises. On the issue of formalization and compliance, there is a Malawi Investment and Trade Center within the country, which is meant to serve as a one-stop shop service center for enterprises. So issues on how to formalize and so on. But I think this has not been used, or at least the awareness and understanding of the services that are being provided is quite low. So we think that what needs to happen is this needs to be scaled up and streamlined to support formalization. And some of the ways to do this is, you know, improving investment in knowledge or at least campaigns that are able to let people know, and also building the right technological tools to enable people to log on to the platforms when they are based in remote areas, given how largely rural the population is. And the last bullet here is around how do we use government created services such as your warehouse receipts, which exist, your collateral registry, as well as your Malawi Bureau of Standards, which are all services that are available, but being not very well used. These limit the opportunities to de-risk lending. And I think that those were some of the areas that needed to be addressed to be able to further grow SMEs and address some of these demand side, supply side, and policy and regulatory issues. Back to you, Obert.
Thanks, Comfort. I think with that, we can now frame the challenge. I think what Comfort has really painted on Malawi, which is quite common across the region, is that we need a product, particularly speaking to the myriad of problems or challenges that are being faced by MSMEs and their growth. Access to finance, it becomes one of the core problems that we need to tackle. So we will have a series definitely that will look at other problems, such as your formalization, business support, etc. But at this point, the challenge is around access to finance, and honing into that, we want to create a solution that is business centric, and this really speaks to the sustainability of the solution. If it is not a sustainable one in terms of it being able to generate revenue to create and sustain it as a product, it should be then properly motivated as to where the source of funding, should it be government or an NGO or donor-funded type of setup, would then be necessary to make sure that this solution works. Again, based on the background that Comfort and also from the demand side presentation I gave, we should be able to look at the different sectors within business. For example, agricultural businesses or agricultural-based businesses and the value chains within that of the different players and within that sector are quite different to the ones in the manufacturing, although quite linked, as well as very different to the wholesale and retail, although quite linked. So we see a way that, you know, the different sectors can speak to each other, but the solution has to have a nuance of being able to be accommodating of a farmer whose needs might be seasonal and their usage of different financial products and access to funding should be tailored to that particular sector versus a wholesale, retail, or an IT or different sectors. Again, it should also be tailored to how the business grows and the changing climate they're in. particularly when we look at businesses and the needs from a startup phase, look very different to an established or mature business, which has been there for 5-10 years plus. The different funding options availed to these businesses by phase are quite different, and primarily, if the challenge is therefore to adequately look at the different funding needs that are prevalent in the different growth phases of a business, from startup to growth to establishment and maturity. So we really look at that. We have a lot of businesses, as Comfort mentioned, that are very micro in nature, with a lot of youth and women-led enterprises occupying this sector. How do we address this problem? And looking at some of the main limitations of their growth and viability, being that a lack of adequate capital or access to funding options, as well as other funding, other financial products that might be needed, such as your cash flow. So the considerations that we have to look at is that the current product landscape has severe limitations. Firstly, for MSMEs, many have had to access funding in their personal capacity, be it from a formal financial institution, in order to fund their business enterprise. So we find that there's a lot of retrofitting that happens within the current financial product landscape that Comfort also touched upon in his slides on the sectoral view. Measuring risk appropriately, there's many credit scoring models that have been developed. Some work, some are not adequately working. How then does this solution, how then does this innovation bring a solution that will be adequately measuring risk, and also at the same time de-risking, as mentioned by Comfort? One consideration to look at is that there's an increasing digital footprint with the advent of mobile money, as more and more people are getting onto the platform. How is this? How does this aid the solution into creating a more viable access to finance? And then the last one that was also touched upon was alternative funding models. So there are models on crowdfunding that have been introduced in other countries, in India, for example, and in other in that region, that have successfully worked with regards to raising capital for business, particularly MSMEs, with a specific cause. How can this be done? Looking at banks, uses private funding, and very, very skeptical of the sector, and government has limited resources to extend. How then can we also look at how this raising capital to meet the needs of MSMEs can be met? So with this, the challenge is really to how do we get an access to finance challenge that takes into account the different types of businesses that we're looking at, the high informality, the high number of small and micro enterprises. How do we look at adapting this product as a business goes through its life cycle? I think that is where we'll stop for the day, and allow that we can have some questions and answer session for the next 10 minutes. Over to you, Rob.
Great. Thank you very much, Obert and Comfort, for great presentations there. So as Obert mentioned, we'll now open the floor for a brief question and answer session. So if anybody does have questions for either Obert or Comfort, please can I ask that you click on the Q&A button at the bottom of your screen and then type in your question there, and then we can pose these to our experts. So I see that Carlos has sent through a question relating to business and digital skills. So I will pose this to Obert. So how can we design basic business management literacy programs that are tailored to SMMEs? Most SMMEs die after a few months due to a lack of business literacy. So Obert, could I ask you to elaborate on some of the entrepreneurial skills gaps that typically prevent SMMEs from being able to access finance? And in doing so, give us an idea of what sort of considerations need to be taken into account when designing these literacy programs.
Hi. So the way that most products are met, I think one of the main issues and across the region is they are very high illiteracy rates. So a large part of the population is uneducated. We find that a lot of business owners, not entrepreneurs, but a lot of business owners, particularly women and most rural businesses, and some considerable amount of the youth enter into business from a survivalist perspective. So the base, and looking at the base education, most have acquired up to primary level, or with considerably more than half having acquired secondary education. So I think there are some issues that we need to get right. I mean, from a business perspective, the designing of business management skills or literacy programs, the same way it happened within the consumer space. Firstly, number one, we need to ensure that the service providers are the ones that are capacitating any of their clients and onboarding them so that they use the products that they are buying or purchasing well. Not only does the onus fall on the service providers, but also on your small enterprise development companies. They have a fundamental role to play within industry to ensure that the enterprises that are passing through their doors or that are operating in industry also have the basic management skills to operate and run a business successfully. Unfortunately, these exercises are quite expensive and from a going concern are not sustainable. Definitely, there needs to be a model that is designed. Some have put it on apps, so you can get an app that you download and it can teach you how to do basic accounting principles, report your turnover of the day, report your expenses. Just mere separating of income and expenditure is quite problematic, especially for your micro and survivalist businesses. So I think that is a very valid point. And if that can be employed into this solution or innovation, that would have a high impact.
Great.
Oh, but I just wanted to add to your answer there, which is, I think if it's a program, it's also very important to not forget that, or it's important to avoid creating a generic solution based out of whichever best practice. So it's very important to also include your target market as part of the design of your business management skills training or whichever, because I think the context, as I mentioned at the beginning, really does determine the need or the gaps in capacity that you face within the specific target market that you're trying to reach. So it's quite important to work with the SMEs as well to try and better design a solution that meets those gaps.
If I can add to that and give you a bit of the thinking in the way that the challenge was designed in itself. So we understand the scarcity of digital skills that are crucial to really enable people and their business to become successful and viable. So really one of the key objectives of the competition is to provide digital skills development and mentorship opportunities to the participants. So these are specifically targeted at tech and innovation, data science and data analytics, and then finally the last component is business and entrepreneurial skills development. So we do understand what skills are necessarily crucial for individuals to create businesses that are scalable, products that meet the needs of underserved individuals. So there is quite a significant skills development component of the competition itself. Comfort, I see there is a question that came through on my private messages. So this is related to access to finance from the supply side. So SMMEs and typically informal traders have limited data that can actually be used by the banks when they apply for finance. Could you elaborate briefly on some of the alternative data sources that these emerging SMMEs could use that might enable them to get a loan from a bank?
Yeah, sure. That's a good question. I think we've seen in some markets, particularly East Africa, as well as some of your South American countries, where they explore the use of mobile network data. So not only your mobile money transaction data, but also how you interact with your airtime purchases, for example. Another alternative data source that has been explored is your utilities data as well. So those are two data sources where we've seen credit scoring models and fairly reliable credit scoring models being developed that have been able to better segment those micro enterprises that traditionally would not have been able to be risk disaggregated.
Perfect. Thank you very much. And I think, ladies and gentlemen, we've reached the end of our allotted time, unfortunately. So first of all, I'd like to thank all of the attendees, and then as well as our speakers, Obert and Comfort. Thank you very much for taking the time to engage with us, and I hope everyone enjoyed the webinar. I'd just like to remind you that the presentations that you've seen today, as well as the live recording, as well as relevant readings that Obert and Comfort feel may assist you as you design your products, will be uploaded to the SADC Innovation website, so you can look out for those there. Remember to keep up to date with our official hashtag, so that's hashtag SADC Innovation on social media, and visit the website for more details. So this is www.sadcinnovation.org. I see we have one more question that came through. Unfortunately, we won't have time to address that today, but please, as I said, keep a lookout on for updates on the website, and we will hopefully be able to answer your questions then. With that, I'd like to close. Thank you, everyone. Have a lovely afternoon.